The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman following Steve Rhodes. Great show, great 2 hours in fact. And this is Tuesday, so Tuesday, of course, the option hour comes right after me. And you've got, this is a very interesting day because it's Tuesday. Slight change, slight variation to the roster. We go into the options hour, then we go into, let's see, so that'll take us 12 tomorrow. Then we got Daryl Martin. Daryl, of course, and Tom going to be in San Francisco area. Just check out front page of TFNN. They're going to spend 4 hours giving you a free workshop. This is just outside of San Francisco. Check out the front page of TFNN because it's Saturday, this coming Saturday. I'm quite sure that the room will be full, so you better sign up right now. And, of course, straight off that, you got Dave White, you got Ken Shreve. You come right back here with Tom O'Brien, wrapping it up at 4 o'clock till 6. Just great shows all the way through. And 877-927-6648 is the number to call. Love to hear from you. And today, I believe, let me just double check this. So the E-mini that I'm showing right here, if you're looking at Tiger TFNN.com, you go to the Tiger One, you will see that you've got my charts. I was just hunting around here to see where my cell phone is. I like to be able to look at the same charts that you're looking at if you're looking on the smaller device rather than your computer. Doesn't matter. Here we go. The E-minis yesterday made a high of 50.51.75, and today's high is 50.51.50. That tells us, be a little careful, because in fact what we're doing right now is making the potential peak B in the daily chart. And whoops, this is not the right one. I wanted to go to the 120-minute charts right here. 120-minute chart uses a bunch of techniques that I use. Tiger TV. That's exactly why my wonderful engineer just reminded me to get focused here. Tiger TV is the name. The 120-minute chart made a high at that 50.51.75 level, peak E in the ChapmanWave, in a rising channel. It couldn't make it to the top part of the channel on the little bounce we had an hour or so ago. But in fact, what it's doing is it's working its way towards the support level. Now, this is a technique that I teach. Spend a lot of time on this in the level 1 courses that I teach, all my basic courses in the ChapmanWave methodology. They have nothing to do, in fact, with the A to B to C to D that I expect in the buy mode or on the way down the troughs. This is a pattern. And what's beautiful about many of the techniques is that within the umbrella of the name ChapmanWave, you can put together the letters with the different patterns. Now look at this. Here it is. My CD introducing the ChapmanWave methodology right in the very beginning, slide 40 out of 476 slides. I show exactly what we're looking at. In fact, the chart before shows repeated characteristics, and you like to look at repeated characteristics. When people call me up about the biotech stocks, if you had to reverse this particular chart pattern, this happens to be the Dow from way back 2000 and late 2003 into 2004. If you daily chart, if you had a look at the various charts that patterns that I work on, I often discuss when people call in about a biotech stock, I say, have a look at the pattern, because there are patterns, there are news reports, there are special leaks that go out, there are payments made to the various employees that are made in lieu of cash. Sometimes it just goes in stock. Have a look at that. See what the executive director of whatever it is got. It could be 10,000 shares every 3 months. Check it out. And that's where, if it's upside down, rising, you will see very often, you'll see these cup formations. And then what happens after all the news is out? Plop, it comes right down. So the sell zone or repellent zone and the buy zone or propellant zone are really important. And here we are. We're in the propellant zone. If in fact the E-minis take out 1543, close underneath 1543, then that rectangle formation that we were looking at for so long becomes the zone of interest, and the next level of support will be 1540 to 1537. So at 1545.75, down 4.75 right now. So I just wanted to show chart patterns repeat over and over. Well, this also says if this is leg B up, possibly peak B, and the ChapmanWave methodology you anticipate to go to at least a C and a D, we should continue to rally into the end of the week. And at the very soonest we could make, if today, let's just imagine that today's peak B, let me just double check here because I need to look at the S&P before I say that. Did the S&P make a new high? Yesterday's high was 1556.27, and today's 1556.77. So the floating letter B gets moved up. That means that the S&P, let's look at the Dow. Woohoo! Isn't this exciting? Well, it's exciting because we still remain long. Been long since Monday a week on the Dow. Doja candle forming possibly today with a high of 14,478. That means if tomorrow is a down session, that'll be peak B. If Thursday is an up session making a new recovery high in both the Dow and the S&P, that'll be leg C. So that means Friday was down. That would confirm peak C. That means we cannot make a top until next week at the soonest. It could extend because each leg could go up for a couple of days. So I remain bullish. I'm looking at this next decline as a possible entry into some areas. I'm becoming more and more selective here. One of the reasons being that in the, let me move that away. In the weekly charts, I believe we're getting closer to a pullback that could conform to what a lot of people are saying, 5%, maybe 7%. The reason being, I think it's when we get our peak D in the weekly chart. I suspect that's when many people have now decided it's a bull market. We are going in big. And in fact, what happens is that is the decline that takes us into the teen percentages, 12 to 18%. Hey, it could even be more. I don't really care what it is. That's the one that I'm going to be watching out for. So that's my scenario. Let's go to the Dow and give you all the numbers. 877-927-6648 is the number to call. The Dow is up 3 at 14,451. The S&P is down 1.5 at 1554. The comp index is down 15 at 3237. Is that Apple again? Oh, Apple down 7. What? It must be Apple. Maybe ISRG, another big cap. I don't know what the weighting is in ISRG, but it seems sometimes to have an impact. ISRG, Intuitive Surgical. ISRG. I'm not sure what I was pressing. There it is. Whoa. Down 2 at 514. That's not a very pretty chart pattern, is it? Well, it's made all-time highs at 594, and right now it's trading at 514. This cup formation is something to watch. All right, well, let's get back to our story. Gold is up 13. It was up much more before. Yeah, I'm going to do that right now. Usually I'm going to get to gold, and I don't get to gold. But now I do want to get to gold for a very good reason. Because gold is attempting to make a rectangle formation. It's going to make a series of arches. And one of the things I'd say to subscribers this morning, I believe we've missed our entry. We wanted to get into one of the goals. Actually, on Wednesday, I had a whole selection of $1 and $2 and $3 stocks that I was looking at. We already have, so I don't want to make it a portfolio of $1 and $2 stocks. Yeah, no matter what the percentage gains is, that's not the objective here. The objective is to get really good stocks that have led the way and perhaps are leaders in the field, or have been battered down but have previously been very, very good stocks. So I would like to buy that because I think it has a very good chance of having a pretty solid rally a nice percentage gain at the level that it's at. It would give 12 to maybe, lucky if it's an 18, maybe 20% gain. But I'm not expecting all that much more, and I'll explain why. In the gold chart, in the actual gold chart itself, maybe just because so many of you don't trade the futures, you look at the GLD. That spike, that single leg A spike that we just saw there, that's like an Eiffel Tower up and down formation. It's like an inverted dreaded H. Instead of an H, just really a V upside down. That says to me that we should make, I'm even going to draw it, and we'll see later on if I'm going to. First, I'm going to draw the arch formation. And then that becomes another arch. And that one has a better, that one holds the 9-period moving average support, and then maybe it turns into another arch. So I'm expecting the GLD, which is trading right now at 154, can have a rally to 158. If the dollar, which is in leg, I'll do this as I'm talking because it's nice to get a feel for the different parameters that I'm looking at. The dollar's holding very well. It's made a peak D after an instant restart. Instant restart sometimes can go to an E and even an F. I'm not ruling the dollar out at all. Why? Because EUR-USD is not acting very well. In fact, look at that. That's trying to emulate the pattern that we've just seen in the GLD and the gold contract. The GLD is the SPY proxy for trades at 1/10 the price of spot gold. And I'm looking at this and I'm saying to myself, 644, 652, oh, it's an F and a G. There's a possibility that it's making a G or a slash C at the bottom trough. It's not very good. And if it has a bounce, it's going from 1.30 to 1.315, which is the 9-period moving average of the weekly chart. Hey, I mean, that's okay. I need more proof that the euro-dollar currency pair is able to rally and rally strongly. And if you look at the USD JPY, that is making a brand new buy mode. It did the ChapmanWave. Oh, I love this pattern. It did a double. This is like twins. It did a double stalk leg formation. Went to the neck, went to the head at a peak G. I thought that's possibly what the Dow could do, but that was just a rogue wave to the upside. Pull back, and now it's gone A, B, C, with a candle that says, I might go to D, but I'm coming right back to the 95.90s very soon. The weekly chart, now this is something I have to take note of, has an extraordinary move in leg E. It doesn't give me a sell signal, but it says just be careful here because the upside might start to be limited in a very choppy range, and you might form some kind of a rectangle at the top. Wow, is that the music already? First break. First break, 877-927-6648. I'm going to continue looking at these different things. We want to look at the IWM. We'll continue with silver maybe. We'll look at bonds. Yeah, I'll be back. Basil Chapman, the Dow's down 3, S&P's down at 4.5. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. The IWM, which is the Russell 2000 ETF, is trading at 93.30, down 40 cents. And the 120-minute chart just gave a peak D, second peak D since the low just recently of 88.79. On the 26th at 13:30, that's 1:30 in the afternoon. That's a second peak D, and I believe it's just gone under the 9-period exponential moving average, and it should have a little bit of a rest. I mean, let's face it, these have been fantastic moves. I'm anticipating a rest. I want you to go slowly today, looking at the long side. A number of stocks really appeal to me, and in fact, there are more and more that I'm looking at that seem to have substance to them. The tough thing is to get in now on this pullback, but I'm anticipating only legs C and D, and then there could be a deeper correction. I have to think it through a lot more, and most importantly, of course, we're going to have to look and see just where this market is going to come down to. It could turn out that they want to have a record 8 or 9 sessions to whoever they are, to the upside, and lo and behold, before you know it, we're looking at a bounce to make at least a nominal new high today, and then maybe tomorrow. But whatever it is, we are really close to peak B in both the Dow and the S&P. And that to me is very important. Now, I want you to go through a couple of things. When I looked at the copper charts, I'm going to make them a little bigger. I can see I just need to make them slightly bigger here. Copper has had a really HGK. I wonder if it's HG. I'm going to go to HG and see what happens here. Maybe it's HGK. That's the most one with the most volume. Yes, there it is. HGK had a left side, right side price time match, which should have gone to the 12th. That's today. Instead, what happens, it went to the 1st in the daily chart, and it tested, instead of testing 3.437, which was the low on the 9th of November, the match would have been to today. It went to a little higher, 3.4725. Not a big deal, but high enough that it was a successful test. Yesterday's low was just fractionally higher. So this starts leg B to the upside in the contract itself. And that says to me that copper could have a pretty nice bounce here, and that bounce could take it to 3.63. That's the 9-period exponential moving average. Sorry, that's the 200-period exponential moving average on the daily. And then we'll see, because we want copper to have a really good rally. We want copper in the weekly chart, which kept making these H to M patterns, arch patterns. Look at this. Look, a big, and then a smaller, and then a smaller. But most importantly, which hasn't been mentioned as far as I know, technically, when there was someone, I can't remember if it was Bloomberg or CNBC talking about copper, they did not mention in the weekly chart the most important thing. If you're going to use the technique that I just described of using what I call the ChapmanWave inside track, then look what's happened here. You've got a series of lower lows at the top. So this is so far a pretty symmetrical, meaning the decline is the same kind of percentage down as it is on the way up. Not exact, but close, so it's symmetrical. And I'm going to I don't want to mess these charts up with too much stuff on it. It's so much easier to see on the black background charts, but I'll use this. Those red lines that I'm drawing in now, one of the problems is red is always a danger, but I've got green and red candles, so there's just too many things going on. It doesn't give you the definition that the black, well, you know what? Let's just look at the black. Black candle, so this is HGK 13. There it is. I'm just going to do it so that you can get a really good feel for trend lines. Trend lines and the little mini channels. Now, this is different to a channel. When I talk about a channel, I say channel, then I'm talking about a channel that essentially has two parallel lines. Usually it's wide and the price is bouncing between it. This is different. This says, I think it's a little clearer in the black charts. I don't want to get too confused here. So I'm going to make that red, bright red, and I'm going to make that bright red. And basically what we've got is, it says very clearly that within this particular, right here where we are, if I can make that green and do the same thing at the top, I can show you very clearly in just 2 lines. In this case, it's 4 lines, but they're really only 2 that we're working on right now. So that's red. This should be green. And I can show you these 2 lines. The outer lines, that red line says, yes, we are in what would normally be a buy zone. So you've got to take it seriously. But if copper breaks down under 3.4, be careful, because it's broken that line of support, that inside track buy zone. If it spiked up and it went above 3.79, it would be breaking out. That's green. That's very positive. So I hope the lines very simply give you the parameters to watch. I'll be back. Basil Chapman back with John in Philly straight after this break.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Dow's down 17. Wow, you haven't heard that for a long time, huh? Dow's down 17. S&P is down 4.5. Comp Index is down 20. And we are going to go to our first caller. We've got John in Philly. Hi, John. How are you?
Hey, Basil. Thanks for taking the call, sir. I wanted to ask you about the IWM, and I'm specifically interested in some details regarding the ChapmanWave count on the monthly chart.
Okay, very good.
First,
yes.
And I am in the Tiger's Den. I can see your notations there. I've got an important question. Let me start off with a trivia one first. I'm looking at your IWM monthly and the way you have marked it up. I can see that at least, let's look, I'm starting from the last major low, which appears to be October of 2011. And I see you have notated that with ChapmanWave's peak A, peak E/B, peak C. I look, Basil, at October 2011 when the low was made at 60.09, and there was a strong rally that month. First question, why do you not label the peak of October 2011? Why is that not labeled peak A?
Because it's a very simple thing. Let me go to my CD introducing the ChapmanWave methodology and type in I hope this is the way it is. Low cannot also be high. Let me just see if it can pick that up. Maybe I said it a little differently, but it's all over the show. Oh, okay. I must have written it in a different way. There's a fantastic example in this exercise, and this in the CD, and that example doesn't exist anymore. I'm so upset. And that was Gillette. And what it did was, I'm just going to say Gillette. Let's see if I can find it that way. Nope, I can't find it. Okay, that's because it's on a fixed chart. It wasn't typed in. It was on the chart itself. Let me explain what this implies. In the ChapmanWave methodology, starting from the bottom, the most identifiable low bar, that low bar cannot also be a high bar. Here's the reason. Because I have a methodology that identifies, it essentially counts higher peaks and higher lows. It's a waveform that never sleeps. Every single peak and trough will get notated as appropriate. And when you're making a potential low, how do you know? Here's my question to you. I'm going to draw a straight line, and you can see it because you're looking in the den. There it is. In the month of October of 2011, the close was 74.01, the high was 60.09, and the high was 63.81. How do you know that it's the low?
You don't know that it's a low until time has passed, whereby subsequent months or subsequent bars make higher peaks.
Higher lows. Higher lows.
Correct.
Okay. So now that implies that if there was even 1 penny lower than 60.09 in the month of November of 2011, that would continue the down mode. So the implication is that until you make a higher low, now I like to be very specific, and it entails using a lot of words, but I have to be clear. As long as it makes a higher low bar, in other words, the low of the entire bar of November has to see a higher low the following month or the next, whatever it is. And that says you've made a trough, because a trough is a little mini V-shaped pattern or a cup formation. So the answer to your question is only in the circumstances that lead to the technique that I call an instant restart, and the IWM had a perfect example of the instant restart on the daily chart. The 4th of January 2013 at 87.44, it had, within 3 bars with just slight lows, it made a new recovery high, which allowed it to, is that right? Yeah, it allowed it to have a new A to B to C to D. Actually, that one took 4 bars, so that's not a perfect one. If it took 3 bars, it would have been perfect. There are others that are really perfect. So the ChapmanWave technique has another way of reading it. That's the only time the low bar can also be the high bar, and that's when you've made peak D in an instant restart. Now, it's fascinating that you've asked this question, because if you look at the high of the 1st of February at 90.70, there was a pullback and an immediate recovery, and then that high of 90.70 on the 3rd bar had a high of 90.52. If that was a high of 90.71, that would have been an instant restart potential, and would have said, I have to have alternate labeling here, E/A, F/B. Instead, what happened was, it was very clear. It was just, it gave a down arrow because the stochastic and the MACD were turning around, but it's still allowed to go higher. And in fact, what I needed to do was to change that to, I had it, and I don't know why I didn't change it, to a caret. Now that caret above F gives you the sell signal, and now we're right back. And I believe that this is now, here's another technique of mine. The 2 highs in the daily chart of 91.05 on the 28th of February and 91.06 the 1st of March, there's a chance that I will be calling that a phantom peak A, just to get to that D in a very more conservative way, one peak before the others. But it's a technique that I teach, and it's something that is quite important in my work. So I'm putting A/B, and I've just explained why. But the answer to your question in the monthly, that was your first question, is that the bar of October of 2011 with a low of 60.09, you did not know it was a low until the following bar, which actually gapped up because it had a spectacular move towards the close of the month. So that's the reason. Now there's another technique. Look at the way it bounced off the 200-period moving average. That was a spectacular test of another beautiful moving average as an indicator. So you had another question.
Yes, and as I see it, for me anyway, the more important. You on the monthly chart for the IWM, you have labeled the advance with the ChapmanWave since that October 2011 low with a primary and an alternate count.
Which
AB and leg C, but there's an alternate that you've labeled and also previously discussed, namely
which could be peak F.
E and F.
Right.
My question is, what will be the conditions that you will look for to identify which alternate count is the one in force?
I've already done that, and I did it quite a few weeks ago, in fact. I'd said the moment that the IWM broke above the high of 86.96, that was the high that all-time high that was made in September of last year, pulled back and then broke above it, that the stochastic was rallying strongly, on-balance volume was rallying strongly, relative strength was rallying nicely, not strongly, but very nicely, and the MACD had started to flatten out and then expand. The candle that was made last month, what are we now, March, the candle of February, tells me that if this was going to be a peak F with a doji candle, you might recall that the Dow back in October of 2007 had a doji candle at a peak F top, and that was very different. Why? Because that candle, this is it, I'm pointing to it right now if you're looking at Tiger TV, this is the Dow Industrials. It's the monthly chart at 14,198, October of 2007. That was a doji candle, and that was peak F because the following month had a lower high. That's exactly what you want to see after peak F. A lousy month. In this case, it was a Roman candle. It took out that. It made another Roman candle in January of 2008. What we're looking at here is almost diametrically opposite. In the IWM, the Russell 2000, what we've got is a doji candle, and the month is only halfway through, right? And so far, we're trading above the doji high, the wick high of 92.68. We're at 93.31. Not that much, but very much so far in the candle pattern. I have to put it all together with the other indices, and I have them all in the count that says that the low that was made in October of 2011 was not a low, but the low, and this is a brand new move. And I anticipate that this is going to continue through, let's see, into the summer, into possibly May. It might be June, I'm not sure, but I'm looking at the potential for May based on the weekly chart to be April, May, to give you a pretty serious decline.
So said a different way, Basil, I understand your thought process correctly by saying, using that monthly chart before any high of importance occurs, a peak C followed by a leg D and a peak D has to occur.
At least that. But in a major move like we've had, this is a mega bull move. There's no question about it. You've had not hundreds, but thousands of stocks that have gone up not 100% to 200%. You've got so many that are up multi-100%. Some are even bigger. And that says to me that if we've gotten to this level, and by other measures, not the measures that are normally used, but other measures, that I'm using the kind of subtle psychological measures that some of us who've been in markets for decades have looked at, my suspicion is that the public is coming in, has been coming in, and is still coming in. They're going to get a greater chance now to feel some success, and that's going to go into my leg D, peak D, in the weekly charts that I'm looking at of the Dow and the S&P. And then the rug gets pulled, and they succumb to having bought near the top, or maybe at the top, and they get really nervous, and that gives us enough energy for a coda. I spoke about this in 2007. If you think of Beethoven's symphonies, how they're coming to an end, you've gone through one movement, two movements, three movements, you get to the fourth movement, and it's just exciting, but boy, it is just going on. You're thinking your parking meter, whatever it is. But whatever it is, you get to the end, and instead of going bum, 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 he goes bum, bum, be, da, da, dum, and he goes on, and the coda just doesn't end. And then he goes bum, bum, and you think this is it, and he goes dee, da, dee, dum, and then he quietens down, and before you know it, he goes yum, bum, bum, and it's all over. The all over is the coda that I'm anticipating will take us into the latter part of the year. This is my anticipation. I'm not saying this is what will happen. It's my anticipation based on the waveform that we could very well get an E and an F in the monthly charts. So with that, I'm not saying I'm mega bullish, because right now there are so many stocks, including my Dow Quartet, like not so much GE, but certainly IBM, UTX, and Triple M. They really do need a rest. And this is the rest period that I think is about to come upon us. And it's going to be a rest period that says the next number of weeks could start to see very choppy action, but with, I would say, slightly higher highs. And I've shown my subscribers the pattern that I'm looking for and what I'm looking for in the Dow. But a lot is going to depend on the volatility index. I think it's going to start to show some signs of awakening. So that's kind of my scenario, but what I wanted to mention first of all is that if it's leg C in the IWM weekly and monthly, those are two separate things. It is the monthly that has the greater tide, and that says that the weekly, although it's, let's see, 93.75, had parallel highs, so it still takes now, because of the parallel highs, it will take a week from this Friday before we see whether or not this is actually a peak C in the weekly charts. So if it was 1 penny lower than last week, I'd call it peak C potential. Right now I can't, because it's made parallel highs. A parallel highs just merely maintains the floating letter, and that means C is still active in the IWM, and B, INDU, in the Dow is still active in the Dow weekly, and the S&P SPX.X is actually a little further ahead. It's in C, same as the IWM. So that was a very detailed commentary, and hope that covers a lot of what you were looking for.
Covers it completely, Basil. Thanks so much. I appreciate it.
And just remember, in the IWM, there is support at 90.83, the 9-period exponential moving average of the weekly chart. That's key support. Thanks for calling, John. I much appreciate it. We'll be back, folks. Basil Chapman, Dow's down 15, S&P's down 5.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are back. Basil Chapman, Tech Technicians Hour, and the Dow is down 5. S&P's down 4. This is the tricky part. If they can close the Dow even just nominally higher, they'll say, it must be 8 days, up days. I don't know when they last did. It must be months ago that the Dow lasted 8 consecutive days up. So it's going to be very interesting. They're going to try for Friday, but I don't think they can make it through Friday for another week. I suspect options expiration, we're going to get real choppy action between now and the end of the week. And we've got Dave in Grand Rapids, Michigan. Hi, Dave. How are you? Is that MI Michigan?
What's that?
Grand Rapids?
Yeah, Grand Rapids, Michigan, yep.
Yep, that's what I thought. Okay, good. Because, yesterday I had a caller, and I've had it twice now, where people are calling, and I take it for granted it's the place that I often associate with the city that I associate with the state, but it was a different state. So I just wanted to check. You wanted to look at?
MUX.
McEwen Mining. Do you have a position in it?
I got a small one.
Okay. So this has had a very sharp move, folks. MUX, McEwen Mining, I believe it's copper, silver, gold, not silver, but copper, silver, gold, made a high, peak F. Folks, this is what you want to be looking at. See that peak F? This is a pattern that I call the Eiffel Tower. It goes straight up and straight down. Looks like a capital A, uppercase A. It comes back to the 9-period moving average down to 196 off after hitting 987 back in 2011. Trough D bounces very nicely, makes an A, and that turns out to be an A minus, and it fails, and it goes to slightly higher low at 215, I believe it was. Yeah, 215, and now it's trading at $2.73. Now, that doesn't sound much, but it's a big percentage move from $21 to $27. Think of it that way. So you've got a little bit. I'm going to make a suggestion here. I think you're kind of safe in terms of support. Everything about it so far looks like it shouldn't test the 215 area just yet. It had a volume climax spike low. So that tells me that it can go for a while. I would normally, if that was a red volume candle, I would suggest that it can go for up to 27 bars or more on the upside. But with the green candle, meaning that it made the low, a lower low, and then it closed at the high, I haven't done as much work on the daily in the green candle, but I have on the weekly. And that weekly says that the volume is big, but it's not as big as it had been, say, in the big move going up to the highs back in the week of the 21st of September. So here's my assessment. I like it. I think it's got more upside potential than downside. It's going to be very difficult to say how much upside unless it takes out the high of just the other day of 2.81, and it does it really quickly, sharply, and I would like it to be done soon. I'll tell you why, because if it starts to pull back towards 2.54, it's saying, hey, I need a little more time, and I'm not going to go that high. But if it breaks out now, then immediately 291 is the 9-period exponential moving average in the weekly chart. I'm skipping the monthly chart. The monthly chart says, you know what, you can rally, but you're going to come back and retest these lows later on. But the later on might be quite a bit. I don't know how long later on. I'm just thinking it's like an 8 to a 10-day or something rally in the gold index. I might be wrong. It could turn out weeks, but that's my thinking right now. So this is what I would do if I was you. I would look at maybe others to mix it up with these low price. The funny thing about low price stocks, they look great because you think, oh my God, $2.30, and if it goes to $6, I've almost triple my money. Rather, you don't know which one's going to actually break out like that. Sometimes they move quickly and then they just stop dead, the low price ones, and they're low price for a reason very, very often. So here's my recommendation. If you want to add to it, I would add just a little more on a close above 281, but I'd also look at a few in the same area at about the same price and mix it a little bit, because one of them will have that bigger move. They might not all have them. So I hope that helps you, Dave.
Okay, thank you very much.
Good eye and good entry. Folks, stay tuned. You got Victor Jones coming up. Options Hour, fabulous program. Really a fabulous options program.